The major news reports this week include the global economic turmoil with Japan's stock market plunging over 10%, confirming a bear market to come. Is this just a temporary blip? Second, this comes right after Warren Buffett just sold $86 billion of their Apple shares, increasing their cash pile to $277 billion. Elon Musk commented that it's clear that Buffett is expecting a correction of some kind and called for the Fed to drop interest rates. Third, we'll watch a new interview of Elon Musk by Lex Fridman, where Elon says that Tesla this year will do over $100 billion in revenue. He must be seeing a good chance for great Q3 and Q4. Fourth, in a big move, Tesla China just created a new company called Tesla Insurance Brokerage. They made Tom Zhu to be CEO of that company. The question is, what is this for? Many believe it's a sure sign that robotaxi is about to come. And finally, we have an update on Tesla's Megapack factory in China. So I've got Jeff Lutz with us. He's a multi-decade supply chain executive and chief quality officer, and now CEO of his own high-tech manufacturing consulting firm. Welcome, Jeff.
Hey, Herbert. Great to be with you. Obviously, a news-packed morning, especially in the economic world.
And I want to get your feedback and tell us what's going on the economy, and then we'll watch Elon. He's both positive and negative. He's actually expecting, great revenue for Tesla in the coming months, but yet he's kind of signaling there might be a recession. We'll see what you say about that. So we've got, this is how it happened last night. Economic turmoil. Japan stocks plunged over 10%. And not only in Japan, they paused their stock market. So did South Korea. There's a bit of a panic going on. What's going on, Jeff?
Yeah, it was a 12.4% move on the Nikkei. I think the Nikkei is the second biggest, exchange. It's a big deal when that happens. There's this thing. I'm not going to get too wonky or too far into it. There's articles on it, but there's this carry trade that broke down as basically the yen's going down. Interest rates have been inching up, which is kind of a thing that does not happen a lot in Japan. That delta between their interest rate and a lot of the trading activity and equity activity that could be occurring in other countries like the U.S., for example, that gap declines. You're not seeing that arbitrage or that advantage for them, and basically that whole thing broke down. Let's see what tomorrow brings. Obviously, it had a pretty big impact, in Asian markets, and of course even in the U.S. markets. I think overnight, and again, very illiquid, early, trading, overnight trading. I think the NASDAQ was down over 1,000 points at one point, over 1,100 points, at one point. And, as we're going through this, conversation right now, there's been, a bit of a recovery, but, we're still kind of early into the day. But the things I see happening, so when we had this issue, a lot of things just kind of are happening over the weekend and coming together at once. It's kind of just a lot of things. So one, the issue we just discussed in Japan. Two, this pending potential, war in the Middle East is definitely, causing people to get nervous. Although if you look kind of historically, wars may have kind of a momentary issue, but in general, they kind of, they don't have a long-term impact in terms of equity markets. But, that's definitely got people on edge. And there's obviously a lot tied to a conflict in the Middle East as it relates to oil and so forth. Third thing is this, we'll talk a bit about, Buffett and what he did in terms of his move with Apple and his move with his cash position. I think the news is not actually getting much of this right. And I'll give you kind of, my take on it. Four is I kind of view this as a bit of fake news and really is the NVIDIA side and in this whole thing about Blackwell. We'll talk a bit about that. And then finally, there was a data point we got, Monday morning about the economy. It's called ISM Services. It's basically the services side of the economy, the purchasing managers, the people that buy stuff for the services side of the economy are surveyed monthly, and really about their expenditures, how they see the future, what's going on with employment, what's going on with their overall productivity and activity. And basically that index is in contraction if it's below 50, and it was a prior month. And it actually came in over 51. And long story short, it came in higher than expected and not in contraction. And so we had a couple of data points in the economy to wrap up this at least the start of this conversation. We had a couple data points in the economy over the last week that have gotten people nervous, with employment and unemployment rate shooting up to 4.3%. Our trough on unemployment was 3.6%. So there's this economist rule called the SOM rule that got triggered when you move up, over 0.5%. And then, some of the other jobless numbers did not come in well. But inflation is overall still trending well. And there's just nervousness in the economy with this softness on the job number. It wasn't like we're in a jobs recession. We added 114,000 jobs, but it was much lower than expected. And so with those nerves leading into this weekend, Japan, Iran, this Buffett, Apple, and then cash position, and then this comment on Nvidia, which is one of the biggest companies in the world. I think it really kind of boiled things over and kind of put us to this point where we were this morning.
Yeah. Great summary of everything that's going on. Curious what you're going to say about whether or not we need rate cuts, whether we're going to get into recession. We'll go into each of these points just a little bit closer. So let's do this. Let's take a look at Professor Siegel. Wharton, he's calling for a 1.5% rate cut by the Fed right now, a 0.75% cut in an emergency meeting right now, another 0.7% cut in September. You'll see that I'll show you shortly here, even Elon thinks that this should happen. And then he also is possibly, commenting on Warren Buffett saving cash right now. And yet, like I said, we'll show a video of him pretty positive about what's going to come to Tesla in the second half of this year. So let's watch this. It's about a quick 1 minute, 2 minute long.
Talked about quite a bit. It was down in the low teens, up 26 points a day. It's been over 50 at one point, 49, 80. And earlier, Tom Lee said when we see the VIX peak and maybe come down a little, that could indicate some type of bottoming. Joining us now is Jeremy Siegel, Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business, Chief Economist at Wisdom Tree. Jeremy, I hate, you probably aren't happy to say I told you so either, given what we're witnessing. But you thought the Fed was staying once again, for the second time, staying at the party too long and too restrictive.
Absolutely. And, this may surprise people. I'm calling for a 75 basis point emergency cut in the Fed funds rate with another 75 basis point cut indicated for next month at the September meeting. And that's minimum. The Fed funds rate right now should be somewhere between, 3.5% and 4%. Let me give you very simple logic of my position here. At the June meeting, the Fed has said that the long run Fed funds rate, when inflation reached 2% and unemployment has come up to 4.2%, should be 2.8. That's the normal. 2.8 is the normal Fed funds rate. Well, on Friday, we blew across the employment number. We're at 4.3. That even argues for a lower one. Now, as far as inflation, we're at 2.5%. We've gone down 90% towards the target on the inflation rate. We've overshot the target on the employment. Those are the two targets explicitly mentioned by the Federal Reserve. All right, and how much have we moved the Fed funds rate? 0. That makes absolutely no sense whatsoever.
Emergency rate cut. I like this guy. I've been following him for a long time. He's calling it, as far as I'm concerned. What's your thoughts?
Yeah, it's hard to know in these situations because there's this thing called this long and variable lag. Is he right, or is he going to be wrong? History is going to be a good judge of his position versus the Fed. I do agree that, they actually should have cut in July, and they should have signaled 3 or 4 weeks before that meeting that it's time to start. If you look at some of the real-time inflation data that's coming in and some of the predictor tools, like they're trending below, 2.5%. Some of the data I saw Friday, and you have employment, their year end. And so the Fed has two mandates. They have an employment mandate and they have an inflation mandate. They want to get inflation to 2% or below, and they want to keep unemployment, below 4%. So their year end target was below 4% for unemployment. We're already at 4.3% per the data point that just came out. So there's a problem. There's a disconnect. So you have unemployment that's higher than planned. You have inflation that's trending closer and closer to target. Why is the Fed funds rate at 5.5% when inflation is arguably somewhere, in the 2.5% range? Why is the funds rate 3% higher? That's highly restrictive, and that could be causing a tremendous amount of damage. So we've already had this issue, in Japan, and there's some serious breakage that's occurring there. You could see hedge funds being unwound. You could see a number of things that could happen here. So this is a pretty tenuous situation. I'm not trying to, scare anybody, but when you have the biggest federal bank and the most important in the world that kind of leads in all this, and basically they're lagging in cuts. The European banks have already started cutting. Canada's already started cutting. Obviously, we have a slightly different set of data, and we have to react to that data. But I would say it's arguable that there should be cuts occurring. Now, there's a question that's going around this morning of like what message would be sent to investors if the Fed did do an emergency cut and they called a meeting today. And basically, there's people on both sides of that conversation. One of the things I think that's unique in this point in time, where we are in 2024, than maybe 10 years ago or 20 years ago, is everybody can pretty much see all the data real time. So there's less surprises that are occurring. So I think the market would actually say, okay, now the Fed's actually getting closer and closer to where things should actually be. And I think they will react positively. But there's other people who are saying, well, hey, it looks like, they literally just had a Fed meeting last week. And so what happened from last week to this week that would make you do something, this drastic? So interesting, point. I think there's points on both sides of it, but I'm definitely leaning towards they have a mandate, employment, inflation. Inflation is very close to trending the target, and employment is now above their year-end target. They should be cutting, and they should be signaling future cuts as well. So watch the dialogue from the Fed governors over the next today, tomorrow, and over the next couple of weeks. And that dialogue could also potentially help, let us know what's happening.
Okay, let's wrap up this story quickly and then move on to the other ones. But you showed this one, which is information about services manufacturing. It's happening and looks like it's good news, right? This came this morning. It quieted down the turmoil. Tell us what we're looking at.
Yeah, and just briefly, this is the survey I just talked about earlier. It came in better than planned. If the numbers are higher than 50, the economy is in expansion or expansionary. This isn't like dramatically higher than 50. But the forecasts were to be well below 50, and so it beat. So this is actually we're at a point now in the economy where there was a point in time when rates were going up, where good news was actually bad news, meaning the Fed would continue raising. Now we actually want to see good economic indicators. So I think this came out at 9 a.m. in the morning, right in the midst of this sell-off and in turmoil, and I think it really helped. It really helped kind of cool things off a bit and say, hey, this is actually a really good data point to the strength of the economy. And again, unemployment isn't like through the roof. We don't have 5 or 6% unemployment, but you don't want to let these things get away from you at the same time. So it's really important, I think, for the Fed to move quickly. And I think this data point helped this morning.
Warren Buffett is expecting, or we don't know, but he sold 50% of his shares in Apple. He reduced his position by 86 billion. People are pointing out he still owns quite a significant amount of Apple. So it's not like he sold everything. But is he signaling either A, Apple has reached its peak, or B, he's reserving cash for a potential recession? That's what Elon is saying it is. He's sitting on $277 billion of cash because he added up just a third of it in the past year. So here's the companies you can actually buy with 277 billions of cash. You can see that he's been accumulating it. Now, it's been since 2000, right? But in the last year, he just went skyrocketing here, 277. And Elon replied to that, saying he's clearly expecting a correction of some kind or otherwise simply cannot see better investments than treasury bills. The Fed needs to drop rates. They have been foolish not to have done so already.
Yeah. Yeah. And I don't disagree with the last part of that. The first part of it, though, is on that graph. What you really need to see on that graph is a graph of his market cap, because his market cap has gone up dramatically.
Yeah.
And what you would want to see is the capitalization of the company and then the cash position on one graph. And what it would show is this percentage of cash isn't exorbitant in terms of what he's done. He's been at like 25% in the past. So the fact that he's around 30% at this point, it doesn't mean like the sky is falling into the world. That's one conversation. The other conversation is I don't have any internal information in terms of Apple and what's going on there. But for him to kind of loosen up on that stake, at least sell half of it, usually gets rid of like most of a stake, usually doesn't do, or all of it. So it's an interesting move. I don't think it portends anything specific like to the broader economy. And then with the Apple trade, you have to figure out like, well, why are you in it? When did you enter? Why are you in it? He's made tremendous amounts of money. He's been in it for several years. So it may have been his time, his move. It doesn't necessarily translate to what every move of every trader should do out there with Apple. It's like you're really betting on, are they going to be able to integrate AI and really get this growth story going again with iPhone, and our service is going to continue growing, greater than double digits. And if you believe in that, then it's really an individualized decision for you. Don't mirror every move of Buffett, in my opinion.
So institutional firms are saying that this global market sell-off, it's a buying opportunity. It's a massive fear panic that will create the opportunity to own. And he names all these tech stocks.
Yeah, I'll just make a comment. So this there's a thing called the VIX. It's the Volatility Index. It got to, I think, 62 this morning. These are levels that we haven't seen since that mid-March of COVID, when there was that panic of like, are companies going to even be viable and even be able to function and produce product? And we have that same VIX now. We had a 62 VIX this morning. VIX, the VIX, was literally at like 11 or 12, like a couple of weeks ago. So we had a big move up in volatility, which really, caused a lot of this panic.
Okay, thank you for that. So let's get three big stories, news stories that was published by Elon and Tesla this weekend. Let's get to them. So first is Elon was interviewed by Lex Fridman a couple of days ago. Talks about Tesla's revenue that's coming this year. You've got Tesla Insurance, a brand new company being formed in China, and there's progress with Megapack factories. So let's watch this Elon interview.
What do you use as a measure of success in your life?
Measure of success, I'd say, like how many useful things can I get done?
Day-to-day basis, you wake up in the morning, how can I be useful today?
Yeah. Maximize utility area under the curve of usefulness. Very difficult to be useful at scale.
At scale. Can you speak to what it takes to be useful for somebody like you, where there's so many amazing, great teams? Like, how do you allocate your time to being the most useful?
Well, time is the true currency.
Yeah.
So it is tough to say what is the best allocation of time. I mean, there are, often say, if you look at, say, Tesla, Tesla this year will do over 100 billion in revenue. So that's $2 billion a week. If I make slightly better decisions, I can affect the outcome by $1 billion. So then, I try to do the best decisions I can, and on balance, at least compared to the competition, pretty good decisions. But the marginal value of a better decision can easily be, in the course of an hour, $100 million.
Given that, how do you take risks? How do you do the algorithm that you mentioned? I mean, deleting, given that a small thing can be $1 billion. How do you decide to?
Yeah. Well, I think you have to look at it on a percentage basis, because if you look at it in absolute terms, it's just I would never get any sleep. It would just be like I need to just keep working and work my brain harder, And I'm not trying to get as much as possible out of this meat computer. So it's not it's pretty hard. because you can just work all the time, and at any given point, like I said, a slightly better decision could be $100 million impact for Tesla or SpaceX, for that matter. But it is wild when considering the marginal value of time can be $100 million an hour at times or more.
Is your own happiness part of that equation of success?
It has to be to some degree. If I'm sad, if I'm depressed, I make worse decisions. So I can't have, like, if I have zero recreational time, then I make worse decisions. So I don't have a lot, but it's above zero. I mean, my motivation, if I've got a religion of any kind, is a religion of curiosity, of trying to understand. It's really the mission of Grok, understanding the universe. I'm trying to understand the universe, or let's at least set things in motion such that at some point civilization understands the universe or far better than we do today.
So much came out of that. So he's calling for 100 billion in revenue this year. Currently, we're at 47 billion. 2023, we hit 97 billion. What's your thoughts on that?
Yeah, I mean, it's a 10% growth in the second half over the first half, probably, or more. That's a good sign, and it's to be expected. Tesla guided that the third quarter production and output should be higher, and usually the fourth quarter, is a good quarter. There's geopolitical things happening. There's concern about some of these credits, at least in the U.S. side, and their longevity and the EV mandate and so forth, which I don't think would instantly evaporate, regardless of the candidate one way or another. But yeah, so he's predicting a larger second half than the first half, and I think Tesla's really found kind of a groove in terms of what they're doing with the financing side of it. It's putting some pressure on ASP, but it's not in the same way as it was before, with these direct discounts rolling and people just waiting for them. They're putting these, they're doing these financing deals in the middle of the quarter. They're really keeping their factories rolling strong, their suppliers rolling strong. And so, yeah, I could see them. They flushed all that inventory out in Q2. So they got to ramp up production in Q3. They ramp up production in Q3. Their COGS are going to continue on that downward slope. And I look forward to that. And the question is, what's the pressure on the ASP side relative to these financing deals and their ability to reduce COGS? So that'll be I think the key thing for Q3, but also in Q3, I mean, there's going to, by the time we're rolling out of that quarter, we're going to be approaching the robotaxi event. So there's a lot of, I think, good milestones coming up for the company. I think they're going to have a strong delivery port coming, and then they're going to roll right into the robotaxi event, which really kind of almost, closes the chapter on just building conventional automobiles and opens the one on the company being a fully autonomous company and product.
Okay, one of the big news stories that came out as well is Tesla China founded a new company called Tesla Insurance Brokerage. Tom Zhu is the CEO and chairman of the board of directors of that new company. This is kind of obviously the Chinese registration that they found in their report. Tom Zhu is now in charge of Tesla Insurance. So they've registered insurance business in China. So is this just expansion of Tesla Insurance like they have already in the US, right? They're in the US, we have 12 states that have this. Is this a potential that they're going to prepare for robotaxi? So this is just the information that they shared there. It registered the business 3 years ago, but then removed the registration earlier this year and then reintroduced it. So what's going on there? What do you think, Jeff?
I believe Tesla's global business model is going to bundle full self-driving and an insurance product, where Tesla has full awareness of your ability to be a good driver under your control. And of course, they know how the car performs when it's in full self-driving. And then they can couple that with the kind of the risk profiles that are needed, and the AI, really machine learning and AI that are involved with putting out a competitive insurance product. And I think they're going to be highly profitable in doing this. And they're going to be able to really take the edge off of, do I buy this full self-driving package or not? And I think they're going to come together. And so Tom Zhu leading this in China, I think it's going to be a package that comes together and it's going to help with the rollout of FSD. Of when you buy this package, you're basically your reduction, I believe the theory is going to be, and I could be proven wrong, but your reduction in insurance costs from using a conventional insurer versus Tesla insurance plus FSD, you're going to be paying less for the combined value, and it's going to really drive the uptake of FSD. It's going to create a much safer driving condition and a better experience if you buy a Tesla. So Tom Zhu adding this title. This is very common in China to have kind of multiple titles and, and be in charge of other entities. So yeah, he's not leaving his current post in Tesla. He's adding more work. He's a tremendously important person to Elon and the Tesla team. And I think this is a great move for the convergence of FSD and insurance.
And speaking about FSD, another big move that Tesla China did is they announced that Tesla employees can get free FSD when they purchase a Tesla vehicle. So they're giving it away for employees. What a great value that is. Imagine if you buy a Tesla vehicle and then if robotaxi happens, your car goes up, for double, 4 times its value when it happens. But it also gives you a lot of data that you can capture. So they're giving away FSD. What a great thing. This month, by the way, is a very important month for FSD. You're going to get the FSD 12.5 rolling out. It's going to start rolling out for Hardware 3 cars. It's going to roll out for Cybertruck. You're going to finally merge the highway stack with the city stack. So now you're going to go truly end-to-end everywhere. And then you're going to get Smart Summon, Banish, and Reverse all coming together. Elon said, yep, that's a big deal. Thoughts on that?
Yeah, it's still, we don't talk about it enough. Just the 12.5 platform, Tesla's really reached, and there's some crowdsourced data that shows that it's had a significant improvement, potentially doubling in terms of the miles that can be driven before there's an intervention. So that's going to be really noticeable if you were somebody that was on 12.3 or 12.2 prior to that, and you get to this performance in 12.5, and that's really showing as Tesla moves up in these major point releases where they have a new model, how in this case the increased parameter count, how much they can improve the performance of the product. And so Elon's projecting another pretty big jump in performance as well. And yeah, we want to get to this point where you're measuring it in potentially months and years from the last time you've had to intervene with the car. And for it to come out then for Hardware 3, that's going to hit a lot of more vehicles. And then Cybertruck, there's a lot of people with Cybertruck. People don't know, you buy a Cybertruck today, like you don't have parking sensors. There's a lot of things that aren't working because FSD isn't on there. So it'll be a big move for that product. I can't wait. But I'm very happy. I have 12.5.1.1, I believe. And I'm very happy with the performance. I think I've had one intervention in about 10 drives. It wasn't safety related. And it's approaching ad hoc situations where there's a road closure and they're kind of turning the sign, go slow or fast, or stop. And it's actually, as soon as I approach a situation where there's a single lane of traffic, the guy holding the sign said slow. And then as soon as he flipped it to stop, my car stopped. And as soon as he flipped it back to slow, my car proceeded and drove around the construction area. It is amazing. It's an amazing experience. And it's not perfect. There's more work that has to be done. But it's getting to the point where you kind of just get into your car and set your endpoint, and it does everything.
Yeah, big, lots of important things happening just this month in August. The other thing that's happening is Tesla's Megapack factory in China is moving at lightning speed. The progress of the Tesla China energy plant megafactory has been revealed. According to the news, the basic foundation skeleton construction is almost done. This is China speed. You can see it's already moving very quickly. They might even be ahead of time, but they're scheduled to go in production.
Yeah, I expect this factory is going to be laid out and constructed. I expect they had a contingent go over to Lathrop, fully review where they're at, what their processing times are, and I believe that this they'll probably be able to drive a 20, 30, 40% improvement in efficiency when they do the next factory. So they're learning. We do that from that first factory. They're learning a lot, and they'll be able to. You'll see a big efficiency jump in this factory. So you'll see more output.
They're also hiring several positions for this already. It's called Urgent. This was July 7th. So that was last month. They're urgently looking for hiring. All right. Thank you so much, Jeff. We covered so much. Thank you for giving us the update on economy, Elon's call, whether it's going to be recession or if it's going to be actually revenue still going to increase for Tesla. So interest rate cuts, it's kind of this thing, right? Even though the recession happens, interest rate cuts will actually help Tesla, but he seems to be very confident about Q3, Q4.
Well, one unique comment about Tesla is their inventory is so low relative to the rest of the auto industry. The rest of the auto industry may run into a problem here. They probably are right now. But Tesla would have seen that earlier because of their low inventory and their low processing time to build vehicles and that low channel inventory. They would get into and out of any kind of slowdown faster and better than their competition. That's just facts.
Thank you so much, Jeff. Follow Jeff on X, the Jeff Lutz. Thanks, everybody. Bye-bye.
Yeah. Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.